Hey everybody, Neil from Benzinga here. Can you guys do me a little favor? Can you guys let me know your name and where in the world you are right now? Let me know where you're from. We got Portland. I want to shout out to Texas. Wayne, thank you for being Italy. Thank you. All right. I want to see we got some interesting states here. I want some interesting countries. I love to see people trading US equities all over the world because we're in a bull market and it's time to make money, baby. Don't waste this opportunity. Don't waste a good bull market. You're leaving money on the table if you do. Georgia, London, UK, Madrid, Netherlands. Joe, thanks for being here. Marcus, love to see you. Veronica from New Jersey. Ilias, you're Greek, but you're based in Paris and Croatia. I'm kind of jealous. I can only imagine what that lifestyle is like. Boca Raton, welcome, welcome. Got another Italian in the house. Lots of representation from Jersey, guys. Loving to see that. New Orleans, New Orleans. Excuse that bad accent. I haven't been out of Michigan in a long time. Sylvester, let's keep it clean in the chat. But I'm very happy to see you too. Shaban, true. Folks around the world pumping it up. All right, guys, keep letting me know where you're from. Give me your name. I also want to know what your favorite stocks are right now. Drop those tickers. What's hot? What do you want to hear about? You're about to have a really good opportunity to talk to a very, very, very experienced technician and fundamental analyst. A guy that looks at long-term trends and short-term trends to find ways to make money. All right. I'm seeing a lot of the usual suspects in here in terms of tickers. Welcome, David from Charlotte. Aldo from Orlando. Welcome, welcome. So we wanna get these tickers in because we're gonna have a sort of a presentation session. Matt Maley, who you might have seen on CNBC or basically any channel like it, any broadcasting channel like it around the world. The man is covered from America, throughout North America, throughout Asia, yes, Europe. If you're in Italy, you've probably seen him. He's the guy that the broadcast channels go to when they want to figure out what the heck is going on. And we're very lucky to have him here today. We're going to learn a lot today about making money in this bull market. Yeah, keep those tickers coming. GNUS. Thank you, VJ. Jumia, Kenneth. Thank you for dropping Jumia. We need to know if Jumia will be the Amazon of Africa. I've got some thoughts on that. Well, I think we'll get into that a little bit. We are at 1 p.m. Eastern Time, but I want to give you guys a few minutes. Well, you guys are fine, but I want to give the other folks a few minutes to get in here so they don't miss anything. So keep this good stuff coming. Keep the love coming in through chat. Gonna make sure that all your questions get answered, and we're also gonna make sure that you're learning a lot, walking away with a lot of stuff. Make sure you're taking notes. Yes, this is recorded, but how many times are you gonna watch a video over and over? You know? Make sure you're taking notes. Ted and Joanne, thank you. Thank you for being here. All right, so keep the love coming in, guys. I'm so excited because every time I do these, I learn something new. I can tell you, I've seen Matt present many times. In the double digits, I don't know exactly how many. but I could watch the guy do the same talk at least 5 times before I fully absorb all of it. That's why you have to take notes. I'm here managing the chat, managing the Zoom and the YouTube and all that kind of stuff, so I don't get to do as much of that. So you guys are lucky you get to just pay attention to Matt. If you are on YouTube, do me a big favor. Don't forget to give us a like. Don't forget to subscribe so you can get alerted to these impromptu webinars, these educational sessions. And hit that bell. You get that little alert. You know, on a Sunday, we might have a surprise guest for you that's just going to give you some knowledge. Really helps us out if you do that. We'll give it just about 2 more minutes. I know that Matt is sitting there thinking, Neil, what the heck are you doing? I am prepared to start at 1 p.m. I'm a punctual man. Matt, bear with me. I just want to make sure we get everyone in here so no one misses the good stuff. Vi, how long is the webinar scheduled to go? We try to keep it to about 40 minutes because that's about how long it takes before everyone starts to drift mentally. But sometimes we get a lot of really good questions and we keep things going. So it might go a little bit longer than that. I would say minimum 40 minutes. Guys, if you registered for this event, you can get the recording in your email afterward. You just got to wait for it. You don't have to do anything. If you did not register, I'm sorry. Next time you got to register. That's why you got to come to benzinga.com. Scott, yeah, we do a lot of free events. All right. Matt, I think that it's time to get started. If you wouldn't mind turning on your camera, turning on your microphone.
Okay, can I do a screen share?
Yeah, you sure can. Let me stop my little thing here.
All right. Thanks, Neil.
I hear the IT department bustling in the background there, Matt. So while you're setting up your screen share, Matt, if you can do both at the same time, would you mind just letting the folks that are new here know who you are and what they're about to learn from you?
Hi. Well, yeah. Okay. Well, so my name is Matt Maley, and I have been working on Wall Street quite a while, and I've been over 30 years in the business, and it's been an unbelievable experience. And the thing is, I still feel like I'm 25 years old, trading in the late 1980s. But just to give you a little idea of where it's funny because I do write a market letter, Benzinga Stock Picks, which has a couple of different tiers, but I do that here in the US, but we talk about markets all over the world. And I also am a strategist, a macro strategist, and I would say actually technically my title is Chief Market Strategist for Miller Tabak. And but I'm much different than any other pretty much any other strategist on Wall Street, because most of those people were former analysts, and there's nothing wrong with that. They're great analysts, but they tend to focus a little bit more on what should happen, the theoretical issues that go on in the marketplace, not necessarily what will happen. And having spent, I spent 25 years on two of the most important trading desks on Wall Street in the 80s and 90s. Salomon Brothers. If you're younger, you may not have heard of them, but if you ever want to get an idea of what happened back then in the rah-rah days of old-fashioned trading, it was at Salomon Brothers. Is a book called Liar's Poker that took place in those times, and I was right on that desk 15 years. Again, talking to the biggest and most important institutional trading desks in the business, whether it be mutual funds, hedge funds, other money managers like insurance companies, et cetera. And it really, again, like I said, it taught me that the market is, everybody likes to say the market is always right. Well, the market is not always right. In fact, it's frequently not right. It's only always right eventually. And that's what we want to take advantage of. I mean, all of us like to have those, that chunk of money that's invested for the long term. And, you have 3, 5, 10-year horizons. But there's also that sliver, maybe a small or even a large sliver of money that you like to trade more actively. And I like to really look at both of those. And that's why we have several tiers of my market ladder. Tier 1 is really more of a long-term, I say defensive, but more traditional, looking for income and things like that. And then on Tier 2 and Tier 3, it's much more short-term oriented. Sometimes it's 3 to 6 months. Sometimes it's 3 to 5 days, so 3 to 6 days. So it's, but again, using that trading experience has really helped me try to be a very unique player in the business. I mean, I start off by so what I try to do is I try to mix both fundamental and technical analysis because they're both incredibly important. Then I also add some of my own issues that I'll talk about a little bit later in terms of sentiment and positioning, things like that, that really allows people, allows me, I think, to highlight, the key turning points in the market, because that's really where you get the big money. You can get the home runs. The thing is, though, is that we don't get key turning points in stocks and or in asset classes or in groups every single day. We get them several times a year. It's great opportunities to make money. So we're looking also for those long-term world changes, the things that they're going to, like Amazon was 25 years ago, going to change the world over the next, over the long term, and buy those. But we're also looking to hit singles, doubles, and triples on the long-term technical ones with stocks that are breaking out or breaking down to really, again, maximize those returns every single year. Again, we talk about regular bottoms-up analysis. I mean, I always look at an individual stocks. You look at earnings, revenues, margins, and on a long-term basis, especially dividends. A lot of people, especially younger people, like, I don't really care about dividends. Well, the one thing that's great, if you've got a really good idea, a fundamental one, and it pays a high dividend, it will pay you to wait. It's okay. You can hold, especially if the stock's just going to trade sideways for a couple of weeks. That's okay, because it's still a good call. Once it breaks out, it's really going to run. You can hold on to it. And you feel comfortable holding on to it and get that dividend payment. And then, of course, I always look at the top down. That's kind of my kind of more of a macro player, and look at the big picture situations, because those are the ones that gives you an idea of what's going to happen further off in the future. Revenues, earnings, margin, margins, things like that. They're mostly telling you what's happening now. We do have forecasts, but those are more guesses. The macro areas where you get a good look for where we're going to get some big changes. So like valuation, I wrote valuation there. It's a horrible timing tool, but at least it gives you an idea to set things up and where we can get some group rotation, where we get that stock rotation. And then finally, correlations. I mean, we all hear about, when interest rates do this, therefore bank stocks do that. That's a very good correlation. But there's also ones that don't work, that not a lot of people know about. I mean, a real good call I made in late 2018 and reiterated this past March was the buy in housing stocks. And everybody's like, housing stocks late 2018. Are you crazy? The interest rates are going up. Believe it or not, they were going up a little bit back then. The housing market was not doing well. I said, well, something, lumber is taking off here. That's an early warning, early signal that the housing is about to turn. It worked out beautifully. In the group, everybody talked about how 2019 it was led by the tech stocks. It was, but the housing stocks rallied almost as powerfully. So I was in both groups, and we're able to maximize those returns by being in more than one group. Same thing in this little thing on the semiconductor stocks. I look at the Taiwan Plastics Index. I was like, what the heck is that? Well, believe it or not, the correlation between that and the semiconductor stocks, the chip stocks, is a very good one. So we're always looking at these type of different ways on the fundamental side of things to get a good, where there's a good setup for the big moves where we can really make good money on that sliver. Again, I don't say I'm going to call it sliver. That makes it sound small, but for some people it's small, some people it's big. But for that part of your portfolio that you're actively trading and really getting those doubles, triples, but home runs and grand slams. But again, technical analysis is funny. Some of these old-time guys, and a lot of people have been around as long as I have, they don't keep up to date with things. However, the smart ones do. And technical analysis is way more than a bunch of lines drawn on a chart. And I'm telling you, the guys who really do this exceptionally well. The really big, really successful hedge fund managers, the Jeff Gunlocks, Paul Tudor Jones, you name them, they all use technical analysis. And they all use it to a great degree. And it's much more than just a bunch of lines shown on a chart. I mean, every single day, the stock market doesn't tell you what's going on fundamentally. It also has to do with what's going on, the hopes and fears of investors. And it's just not a few investors, it's thousands of investors, it's millions of investors, really. And those can give us the situation where the markets get out of balance, which creates unbelievable opportunities. And one of the things I really like to talk about with the technical part of things is like, well, it kind of works, but I don't really, why does it doesn't really make any sense to me? Well, something that's actually fundamentally based. And we all know, I mean, even the most die in the wool, but fundamental portfolio manager at one of your mutual funds will tell you that the stock market that moves 6 months ahead of the economy. In other words, the stock market turns down 6 months before we go into recession, and it usually bounces back 3 to 6 months before the bottom of the recession. Same thing with individual stocks. When they're doing poorly or doing well, they reverse. And then you see that reversal 6 months before their actual business turns around. And it makes total, if you think about it, it makes total sense. I mean, you have this company that's not doing well. Company's not doing well at all. It's had 2 years. They've had to lay off people. They've had to close plants. Well, all of a sudden things start to get better. Their business is picking up. Maybe they've come up with a new product, whatever it might be. Then they have to, but the problem is it takes time. It takes time to hire back the people. It takes time to train them. It takes time to reopen those factories. And so therefore, even though their business is picking up, it's not going to show in their earnings until 6 months, 9, 12 months later. But the big shots, the big mutual funds who have 15 analysts working for them, or the hedge funds who have just 15 analysts working for them, they see this in advance. They see the sales are getting better. They see that they're reopening their plants. They see that they're adding to the they're adding to their sales force or whatever it might be. And so they say, well, I'm not going to wait for the earnings to turn around. I see it's already turning around. I'm going to buy it right now. Well, all of a sudden the stock starts to tick up, and that's when we see that change in trend. And that's why we use technical analysis, because the stocks and the markets and groups tend to move in advance of everything else, in advance of the fundamentals, so that you and I that don't have this army of analysts to look at everything all the time, we can see that in advance. So it's something that's very, very helpful. So I use it very to a great degree. And I'd also note is that technical analysis, though, most of them will tell you they catch the 70% in between. They're constantly looking for the confirmation that an uptrend is taking place, or confirmation that the downtrend is begun. So they miss that 15% on either side, which is okay. The thing that that I try to provide in a lot of different situations is when you look at both the fundamentals and the technicals and some other issues that I learned over 30 years experience in the marketplace to get the actual the actual bottom. Of course, we don't get the exact bottom. We might get it within $1. I mean, that's fine. But if you buy a stock at $50 and it goes to 300, what's it? Again, I would never try to claim that we get the exact dollar. But there's a lot of juice in that first 15%, a huge amount of juice. You buy something at 3 and you get to the key turning point within that $3 range, but you don't get the confirmation until it gets to 5. Well, it goes to $10. Okay, you've doubled your money. You bought it at $3. You've more than tripled your money. You get much more juice. So we're looking for those times at the key turning points. So again, I just want to go back to talk about the general thing that I try to do. Again, we're always looking for singles, doubles, and triples. And those, a lot of times it's just a single. We're just looking for short-term singles. Maybe it might be a breakout in a technical breakout in a stock. And all of a sudden that goes from a single to a double, all the way to a home run. You just never know what that's going to happen, when that can happen. So it's the key thing is let your winners ride. And so one of the things we want to talk about is I use stop out levels. For those of you, I'm probably very familiar with that, but basically it's a level. You buy a stock, and if it goes down too much, you just sell it, and you're out of the stock. You decide a level in advance, so that it helps you, not kind of get get caught up. Should I sell it? Should I sell it? No, it gets to this level. That's my stop level. I'm out. So, and the great thing to that is when a stock really runs, let's say, geez, I think this stock is going to go from $3 to $10. Well, it gets to $10. It's like, it looks like it still wants to go higher. So you move up your stop. You're as that thing's going to $10, you move up a stop level so that you lock in. You may not get the exact top tick, but you're going to lock in a very nice profit because when it gets to a level, you keep with your rules, you get out. At the same time, those stop levels look very well on the downside because you need to limit your losses. I try to keep it, it depends. Sometimes it's 5%, but usually in the 7 to 8% range and definitely no more than 10%. Sometimes I did, it was one that worked out really well for me this year was Glencore, a commodities trader. And it got down 9%, but I really believed in the long-term play, so I held on to it. Sure enough, the thing's up 60% in less than 6 months. But the point is, you always have to limit your losses. Okay, now I've been talking here, patting myself on the back, saying how I've made all these great calls. But just in the last year, some of the turning points that I have called is I called the low. Oh, geez, I missed the most important one, which is interesting. But anyway, I'm going to go. The most recent one was the low in September in the marketplace. And we had this correction, and the stock market. Everybody was saying, "Oh gosh, this may be the beginning of it. Who's going to win the election is probably going to soften right into the election because there's so much uncertainty." I said, "No way." Again, the things I was looking at in terms of fundamentals, valuations had come down enough for me to like it, and I also noted I just used history. Again, it was a unique thing where I just saw that only one time since 1950 had the stock market had not rallied after the election. But I saw this time around, I thought that it was going to rally a lot more, and that worked out really well. And the thing was particularly good about that one is that I saw in the end of August that the market was going to correct. People forget now that we've had this correction in this year. It was like, oh, no, we rallied straight up from March. No, we had, if you remember, we had a correction, 10% correction in the S&P and 12% correction in NASDAQ. I nailed it. I told people, buy the SH, which is the inverse S&P, the PSQ, the inverse QQQ, made 10%. So those people were able to hedge their short-term losses and then flip them right out at the end of the month. We flipped back to the bullish side of things, and the thing took off. Again, I'm going to go back. I should have listed these things in reverse order that I have them. But one of the things I did last year, so I'm going to go to the last point down there. I did this time last year, I was pounding the table, key turning point. I saw sentiment, I saw positioning, I saw overvaluations. The fundamentals were way too far, and overbought conditions in terms of looking at relative strength indexes and things like that, charts that were telling me the market was really pounding the table. The market's priced for perfection. Everybody's trying to tell you that these pandemics never amount to anything. This one it's much more serious. And I told people to raise cash in a serious way, and other people, the more aggressive people, to get short or buy puts, et cetera. It worked out very, very well. Now, again, when it came March, I called the bottom there. And I must admit, a few years ago, I called the bottom to the day on Christmas Eve, 2018. And I said, go back in with both feet. I readily admit I didn't say with both feet in March this year, but I did say get back in. So, again, you can always tell people about their winners. But I'll tell you one of my losers this year. I picked Alibaba. The stock had already come down, and I thought this is a great entry point. We got in the stock. I thought, this is one we can give a little more leeway. It dropped 8%. I was like, hold on to it. It dropped 9%. I said, that's it. We're out. We got out of the stock. It ended up falling 30%. Okay, that was just so vital to be able to get out of those losers. And as I'll show you going forward, I made a lot of real good individual gains, whether it be on ETFs or on stocks, that way more than made up for the loss we had 9% there. That's the only one where we really got out in a major way. I also got out of Pfizer, which hasn't done anything. It hasn't gone up. It hasn't gone down. But the reason on Pfizer was that the insiders, the CEO and a lot of insiders sold a huge portion of their stock. 60%. Insiders don't sell that much of their stock unless if they think it's going higher. So that one didn't continue to go down like Alibaba did, but it allowed us to get out of Pfizer and put our name into Merck, which has had a nice run and what I think is a better management. Group calls this year that made again. I mentioned how I raised cash in all groups in this time last year and into early February. But when the market, when I saw it called a turnaround, the market pounded the table on the mega cap tech stocks and also the healthcare stocks. And the obvious thing with healthcare stock was like, hey, somebody's going to come up with a virus. This is a war. And we all know what happened in World War II when people in the United States decided we're going to work 24 hours a day, 7 days a week to make sure we get something. They get it done. And that's what we saw in the healthcare area. And we made some nice plays on some individual names, but also on the ETFs, the IBB and the XLV. Then when I saw what was happening and this change, this parabolic move in these mega cap names, and I saw interest rates starting to move up, I said, no, we got to get out of these names, sell the mega cap. When we get back into tech's not dead. We got to go into some different names. And sure enough, at the end of the month, that's what I did. I said, okay, we're going to continue to pare back on the mega cap names. And we're going to go into the chip stocks and the cloud computing names because they are breaking out. They are still the future. They were still in the early innings of cloud computing. And of course, the chip stocks, the semiconductors just took off while the mega cap names did not. But I also really pushed. I had been negative on the bank stocks for 3 years. I say negative, I'd been cautious. I didn't say, short them because they did rise, but they badly underperformed because interest rates were going up. I saw a key change in the long-term trend, or at least the intermediate-term trend, in interest rates through both my fundamental and sentiment work too, and positioning. Too many people were long the bond. Long the long bond, long the 10-year note. So that meant people had to sell it. That would create, because we know that interest rates go in the opposite directions of bond prices. So the bond prices went down, interest rates went up, the banks rallied. And I also called a stock on the energy stocks, which were, again, I used fundamental analysis. They were incredibly cheap. Well, they've been cheap for a long time. But they had finally gotten to the point where they were ridiculously underowned. And actually more than that, they were overshorted. You look in what's called the commitment of traders data. So you see what the futures people were saying. And then of course, it was like 2% of the S&P 500, the lowest in memory, the lowest percentage. So too many people on one side of the boat. That was a great turning point. Same thing with the bank stocks. That was the time to buy. Those things have rocketed higher. I'm actually being a little cautious here now. Said short-term traders take a few profits. We're going to get another opportunity to buy those. I think it's going to come in a little while. But again, I just think that these, people are not. There was a thing out just on, it was Motley Fool came out and said, with a question, within the last couple of days, is it time to buy energy stocks? I'm like, well, that's great. I think it's still time to buy energy stocks, but the XLE is up 60% and the XOP with the oil service, that's up 80%. And now they're just getting in. When you follow my work, I hate to say, I don't want to say, toot my horn too much. You follow my work, you get in much earlier than I think some of the other general, when you just follow the mainstream stuff on Wall Street. I mean, most Wall Street strategists are paid to be bullish. That's fine and it works well when the market's going up, but we're trying to maximize our profits all the time. And again, just looking beyond the fundamentals and technicals, I don't want to run on too long here, but again, sentiment. When things get too bearish, it's not always a good timing tool, but it gives you an idea. But I look at a lot of different sentiment tools. A lot of people look at the individual traders, sentiment pools, the investors' intelligence, which measures market letter writers. That's important. But I also look at positioning. When those two come together, when too many people are short a stock, or too many people are short a group, or too many people are short in the futures market, watching the positioning of the futures markets is very, very good. You know that they're going to get squeezed and that thing's going to take off. And the same thing on the flip side, when they're too long, like they are, well, I'm going to talk about the dollar in a minute. They're actually too short the dollar, but when they get too far to one side, it can really make help people to make those big moves, because again, the early part of a big change in trend is where you make so much more juice. And I tell you, that's where Warren Buffett doesn't time the market, but in a way he really does. When the markets get completely washed out and nobody else is willing to buy, that's how he became a billionaire. Okay, because he bought at the bottom when there was blood in the streets. That's what I'm looking to do. When the markets get washed out, the sentiment is all on one side, the position is all on one side. You can make it in both directions. You especially can make it when things are washed out to the downside. The one thing I do want to talk about here is that we really, really, really want to concentrate on is that so many people have made a lot of money in the last couple of years on the long side, and that's great. But you got to be able to make it in both directions. And in 2000, and after the big internet bubble, and a lot of individual traders got into the markets, and they got their heads handed into them on the downside because they thought the only way they could make money was on the upside. They kept buying on weakness, and they got killed. The thing is, so number one, you have to have your mindset to say, I want to be able to take advantage in both directions. So embrace it. Embrace when we get a correction, because I strongly believe we're going to get a deep one this year. Like, it's going to be a bear market, but we're going to get a 10 to 15%. I'm sorry, a 15 to 20% correction. We always get a 10% correction, but 15 to 20% correction is good, where people who are nimble are going to be able to make a lot of money. And the thing is, what in 2000 or 1999 and 2000 people didn't have is, yes, you could buy options, you could buy put options, but they all expire. None of them, they're always, they're quarterly options. So, in some cases, like, well, geez, the expiration is until, isn't for two or 3 months. I've got to pay a lot of money to make this bet. Nowadays, you have weekly options. I mean, we're going to talk about Apple in a minute, but Apple Computer has got a great, they have it every week, weekly options. So you can go in there. It makes it much cheaper to make those bets. Also, we have the ETFs, the inverse ETFs that I've already made some money on from my subscribers this year. And I think we're going to make more on those. And also the leveraged ETFs. Do be careful on those leveraged ETFs, though, because if the market goes sideways, they don't go sideways. They go down. Whether it's no matter what it is, it goes down. So these are short-term instruments, but they can still be very, very helpful as we go through the market. Now, again, before I'm just going to talk about some of the names and what I look at. And how they've been able to work. And here's Microvisions, one of the best call I've made. Now, I'll tell you right now, I've been in the business for 35 years, but the market letter I've only been doing for 6 months. So, I wish I could tell you I bought Amazon in 2005. And I made a lot of great calls, but I wasn't writing my market letter then. And so when we really measured it, we can only go back 6 months, but we still had some unbelievable gains just since I've started doing this and taken my 30 some odd years of experience to work on it. Now, here's Microvision. I took the fundamental picture. They are into LiDAR, which is a laser and radar. LiDAR, and that's that technology where they use a laser to bump, you fire off and it bounces back and tells you where things are. That's what you need for self-driving vehicles. Okay, so that's a great call for us. Like, fundamentally, this is a great one because not only is everybody moving towards those self-driving cars, but we need it for everything. Robots. I mean, the robot's going to run over your dog if it doesn't have that LiDAR technology. This is the future. It's artificial intelligence. It's a great call. Okay, so I got into it here because it was just breaking out. So I looked at the technical basis. It started breaking out here. I said, here's the entry point. I didn't get it in then because I just wanted to get that extra security. This was not one of those key turning point ones, but it did work really well. Look at this. It shot up all the way up here to 250, okay? So it was up, it was up to almost $9, which gave us a 250% return in less than 3 weeks, okay? And I told people on my tier 3 call, which I give 3 times a week, I said, take some profits. We'll buy it back when it gets down towards $5. Well, look what it did. Came back down to $5. I guess, okay, let's roll back into this thing, and it's back up again. So it's worked out really, really well. And this is still, well, for the long-term players, I said, don't sell everything here up at $9. Sell a portion, because this thing I think is going to be a winner over decades, well, certainly over years. So it worked out really well. Invesco is another play. Again, I used that fundamental outlook. I definitely saw interest rates moving up. I saw that that was going to be very bullish for the financial sector. And I said, well, I did talk about some of the bank stocks, and on our tier 3 call, I mentioned Wells Fargo because it was so washed out. We used the options in that one. They went up 300% in a week. But this was a little bit of a longer term play, but it still worked out beautifully. I mean, it's Invesco, and between looking for higher interest rates, knowing a lot of money had to come into the institutional money had to come into this area, financial stocks, and knowing that there was a lot of mergers and acquisitions coming. A lot of these banks are looking to get more and more into the business of individual investors, the wealth management business. And right now, its most recent rally came off of rumors that JP Morgan Asset Management is going to buy Invesco. But again, this is something that's only 3 or 4 months old, and we've made almost not, we haven't doubled our money, but come very close. But again, using, here was the entry point. I wasn't sure. It broke its 200-day meeting average. It made a nice higher high. And I said, let's jump in with both feet. And it's worked out extremely well. I mentioned Glencore earlier. This was another one. This is a company that, one of the best calls I ever made on Wall Street on the macro calls was when in 2011, I called for sell a bear call on commodities. It worked out very, very well. However, and there was several different reasons, but one of them was that Glencore went public. Whenever a company that has wanted to stay private for a long time decides they want to go public, all right, that means the top's in, okay? So they went public in the spring of 2011, and sure enough, I think it was either March or April, but in May, the top came in. These are smart guys. They know the business. That's one of the best rules you want to learn. When a really powerful and important company who's been in business for a long time, and just because somebody has an IPO doesn't mean it goes public, doesn't mean it's the top, because sometimes they just want to add some money so they can build more factories or whatever. But when a company has been around a long time, Goldman Sachs, been a private company for 100 years. They went public in 1999. Okay, they sold their company to the public in 1999. Guess what happened the next year? The top of the bubble. Blackstone, one of the best private equity firms in the world. They've been around for 25 years. Where did they go public? 2007. What happened in 2008? The market rolled over. Sam Zell, now he had a private company, private real estate company. That was his life. Real estate's his life. What did he do? He sold his company. It wasn't an IPO. He just sold it to another company I think it was 2006, but right at the top of the real estate bubble. This is what happens. And again, I just want to, on one side note, make sure that the smart people are really selling. Microsoft, you say, well, wait a minute. Bill Gates went public in 1980 and the stock went straight up for 20 years. But Bill Gates didn't sell. He only sold $1 million. All right. Now he wanted to move out of his garage, of his parents' garage, so he did take out $1 million so he could buy a house. Right. But he even said publicly, if I could, I'd buy on this IPO, not sell. And it was the venture capitalists that sold on that IPO. So again, when those insiders sell, that's a big turning point. That really worked well for us. I'm just trying to look at the time here. When we've been going on here, but here's another one, Alexion. It was the company that I liked on a fundamental basis because it had these rare disease drugs that have been very, very beneficial, but they also get sped up when they're going through their access to their review process within the FDA to get these drugs approved because they're so rare. And you think, well, and plus they can charge good margins on these things. And here's another one. Now this one's we're going to top out, but look at this. We made 30% in 2 months. Again, that's a nice double, triple. Even a home run because it happened so quickly. Now you see it's gone sideways, and that's because it received a buyout. It's not going to go any higher unless it receives some sort of a new buyout bid from another company. And if it was going to happen, it would have happened by now. Again, Patterson Energy is another one where this is traditionally a medical company for dentists. Basically medical supply company. They got into the pet food business and other issues with pets. And I just kept, I kept hearing all these stories about how everything's doing so well. These people were getting out in pets because they're locked up in their houses. People being a pet owner, I know that it's like, oh my gosh, when the economy opens back up, people are still going to want to, they're going to say, oh my God, it's so great to have a pet. And whether I'm home a lot or not, I'm going to have it. This is going to be a great business. Again, stock's up 25% in just 2 months. I think it's going to go a lot higher. Chevron is a little bit different call. I like that because, technically, again, it broke above its trend line going back a couple of months. But the real thing I liked was that it paid a 7.5% dividend. This was on our tier 1 long-term call. You get 7.5% dividend, and they increase it every year. Exxon paid a higher dividend. We didn't go for that one because it's not as well, not run as well. And so this is what I'm looking at right now. Here's the same chart, but look at it. This is where people could think about adding to it. Total technical. It came down, held its 200-day moving average. Okay, it breaks back up those highs. It is going to fly. And I think the energy sector as a whole is going to go a lot higher. Now we can go over some other names that I think look good, and I can also answer questions about what names did you like. But again, just to talk about the ones that have worked well for us in the last 6 months. since I started this market letter. You see Microvision, I already talked about that, up 163%. It got up to 200, remember, up 250%. We took some profits, got back in it. But from when our base is 163%, Invesco 75%, Glencore 63%. And again, Alexion. But here's some other ones too. Here, this is a nice, double. I mean, it's you get singles and doubles. I mean, 25%. Walgreens is just about 6 weeks old. 6 weeks old. You don't have to buy. We want to be looking for the Microvisions of the world, and I'm constantly looking for those names and constantly adding those to my list. I'm not going to give them all away to you today, but these other ones too are just work out really well. I mean, Walgreens is just a drugstore, okay? But it become ridiculously oversold. It was ridiculously cheap. It was going to pay us to wait because they pay a good dividend, and it's worked out really, really well. This again, we have many more returns than that. Now the tier 3 picks, again, sometimes when we talk about some of the options. We'll get more into details on those. And again, there's a little bit more short-term play. I mentioned the Wells Fargo. They went up 300%. And I said, you should take some profits now. You can hold on to a little bit more. Well, 2 days later, the people held on, got a full 700%, literally in a matter of several days. Same with Riot. Micron Technologies, I mentioned, I was talking about, I was pounding the table about buying the chip stocks, 63% in 3 months. Baker Hughes. Now, here's Baker Hughes. Now, I don't want to be misleading here. This is a stock we mentioned on our tier 3 pick, and it's up basically 60%. I didn't add it to the tier 2 pick until a little bit later, so it's not up as much on the official list, but it is for those who are on the tier 3. And again, same with Taiwan Semiconductor, another chip name I mentioned, up 50% in 2 months. These are the things that I'm trying to help people talk about. So I'm sorry, that help people make money. I mean, the whole idea, with my newsletter, the whole idea is that I want to be able to help you make money, help you pay for the cost of subscribing to the newsletter. I'm in it every day. I mean, I'm working at the markets all day long. I do we'll talk about the picks later, but the point is we're making picks all the time, getting out of them when we see that they're not working, so letting them ride when they are. And but I just want to, before we move on to the next kind of stage, I want to say we want to embrace a correction. Corrections are good. People make money. Those hedge fund managers made billions of dollars because they were willing to make bets in both directions on the marketplace. Now that it's a lot cheaper to do that for individuals, we can take advantage of it as well. And I'll just finish by saying that the presidential election years, the first year tends to be the toughest year for the stock market. And it's not by coincidence. The presidents, they back end load, the ones who get reelected, back end load all their new policies. I know that we have this new fiscal package, but the next one on infrastructure, it's going to take a while to pass it. It's going to take a while to implement it. And that's exactly what Biden wants. Even though he's going to be able to claim he's doing all this stuff, all that stuff is going to kick into the economy, third and fourth year of his administration, and it's going to help the economy and help him get reelected. That's what they do. Okay, they do the tough things in the first year. They raise taxes. They raise regulations. They don't care what happens in the first year of their, I hate to say it, they really don't. I mean, President Reagan and President Bush, second Bush, had horrible years in the stock market the first year and a half, 2 years, and they both got reelected. Reagan got reelected in a landslide because by the time the second and the third and fourth years came along, the economy and the markets were doing really well. The guys who back end loaded their bad stuff, like the first George Bush, who raised taxes at the end of his second year, he didn't get reelected. The economy went into recession. He got killed. And then, of course, Donald Trump, who front end loaded all of this good stuff, and it's just too hard to keep the economy and markets going for 4 years. It didn't, and he lost. So I think the market's going to see a 15%, 20% correction. I think it's going to start in the first half of this year, probably even in the first quarter, and we embrace it. And that we're going to be covering a lot of that on my tier 3 calls and in my regular picks, because I just think that it's going to be some great opportunities this year on the market. So, Neil, I don't know if we want to go talk about some of the stocks that I'm looking at that could do well, or just go right into what other people want to hear about, other names. That's fine either way.
Yeah. So okay. So actually, perfect question. I think we want to do a combination of both. So folks, let me know in chat We've got a couple things here. Matt has a whole basket of stocks that he thinks are forward-looking opportunities that he can go through. But I'd love to do a combination of what Matt is interested in right now that you guys should be watching, that you can probably pretty confidently add to your watch list. But I would also love to get some tickers from you guys because we want you to learn. We want you to be self-sufficient. It's about earning while you learn. So what we like to do here with Matt is he pulls up his charting tool, the Bloomberg terminal, and he can look at the tickers you're interested in and tell you what he thinks about them. So let's do a little combination of both of those. And guys, I am getting questions about the tiers, the subscriptions that Matt is talking about. If you're interested in that, you can go ahead and click the link. I will explain how it works a little bit later. If you really want to hear about it sooner, just let me know in chat. Otherwise, I will wait a little bit later after we get some stock picks and some education in. So Matt, why don't you get started with some forward-looking stuff? I like what I'm seeing here. That's a pattern I know. So why don't we get started with this one?
Yeah, this is one here at Apple. I will have a live screen, so I mean this was pre-prepared, but I've got the live screen where I can pull up ones for those who for ones I don't have the pre-prepared, so don't worry about that. But here, an Apple computer, they report this week. I believe, pretty sure it's Wednesday. This is a key time. I mean, the stock is trying to bounce up a bunch, a little bit. I used to know how to talk. It's bumping up against its late August, early September highs. Can we move that down? I just want to move that down. Sorry. So there we go. So we're bumping up. It's actually made a new higher high. But what's going to happen here? They're going to report this week, and one of two things is going to happen. It's going to confirm it and really break out that because we always have to be be wary of head fakes. So this is only a mild higher high. So it's not enough yet for us to confirm that it could be a complete head fake and roll back over. Because if it does roll back over, it's going to be a double top, and that's going to be really negative. So I'm thinking if those who are a little bit more aggressive and like to play in the options market, think about either a straddle or a strangle in the options market, because the chances that this stock, now again, it's not wildly overbought. I mean, it's getting there. But if it's a real negative number for whatever reason, not what I'm expecting, it's going to get hit hard. And again, they have options that expire on Friday. You're going to be able to get short-term options. And if again, to go a straddle is something where you buy both a put and a call at the same strike price. A strangle is when you buy a little bit out of the money, call to the upside, a little bit out of the money, put to the downside. Okay. But either way, I'm looking for a big move, and I just don't know which way it's going to go. I'm leaning towards the bullish side, but we do have to remember, of course, in the options market, especially short-term options, you buy for Friday, those things can go to zero. These are the things we don't buy, try to bet the bet the house on, but you can make some real nice movement. And again, you could go to zero if the stock just does nothing and trades sideways. You're going to lose. It's going to go to zero, or at least you'll lose a bunch because it's short dated. But if you take a look, it's kind of a lottery ticket. And again, I don't want to say it's a lottery ticket because it's not 1 in a million. I think the chances of seeing a big move in one direction or the other is very, very high. It's at a key inflection point technically, and we have news that we know is coming with its earnings this week. So take a look at that one. I think that's going to be a key one as we move through this week. What did I do here, buddy?
And guys, if I just got someone, Pradeep, I just want to point out, this is forward looking, guys. This is Apple. That's Apple right now. Take a look at the chart on your own tool. That thing is forming a great pattern. It's hitting a key level once again. We're talking all-time highs, about to break out, earnings coming up. Pay attention to Apple. I mean, maybe that seems boring to you that it's Apple, but look at this thing. It's about to break out.
And the thing is, if you do that straddle or strangle, and again, you look up in Investopedia, they're not as exotic as they may sound. There are some very exotic option strategies out there. Investopedia can tell you what they are. It's relatively simple. But the point is that these FANG stocks have the money's gone away from them. Momentum is such a key player right now. You know how much momentum money is going to go back into Apple Computer if it breaks above that? They're going to go plowing in. But if it fails, some of that short-term money is going to come out. And again, if you're in the options, you can make 200 or 300 times your money quickly. But again, you want to miss a small part, the amount of money that could go to zero. So you got to be careful on that. But the thing is, that, heck, I can make, am I going to bet, $1,000 or $500 or something on where I can make $50? Well, no. Okay, that might go to zero. Well, no, you're bidding $500 or $100. That may go to zero, but it could go up literally 200, 300, 400 times because we have, kind of that perfect storm. Something's going to happen this week that should make it move. Tesla's another one. This one's, shorting this thing, of course, is the craziest thing in the world. But again, this is reporting this week. It has lost its momentum. It doesn't mean it's going to roll over, but be careful because the corrections in this stock. This doesn't look like much, but it was a 30% correction right there. And the thing about Tesla, it is, same thing with Bitcoin. These things might change the world, but remember, Amazon changed the world, but it still has had more over the last 20 years. It's had more than 20 declines of 20 to 60%. And it's had many of those were over 40%, and 2 of those were 60% declines. And I'm not talking about the 90% decline that took place when the tech bubble burst. I mean, these stocks are not going to go down. Bitcoin's not going down 90%. Tesla's not going down 90%, but they could go down a lot. And they will go down a lot along the way. So be careful on those. Right now, I'm leaning a little bit towards Tesla's going to go down. So I'm shorting that thing is just too difficult to do. But my point is, if you own it, you might want to take some chips off the table. And if you're wrong, it's okay. You can get right back into it when it breaks above that level. You'll miss a little bit, but if it does break down, it's going to go. I'm telling you, it's going to go down 30%. It just is. It's going to at least test its 50-day moving average. Then you can get back into it there. On the other side of things, I just to talk about one thing that it's really interesting, which I think could cause a correction in the stock market. I think sooner than people are expecting, is because of the dollar. The dollar is going lower over the long term. No question in my mind. There's all of what's going on in Washington, D.C. is going to cause the dollar to go lower. But everybody hates it. It is incredibly overshorted. I look in the futures pits, the DSI, Daily Sentiment Index. Everybody is short this thing. Sentiment, incredibly bearish on oil. Every time you pick up a newspaper, the dollar's going lower, and then it's very, very oversold. You can see it, how it got very, very oversold. This is the relative strength index down here in December. It's starting to break out of that. And if it breaks a little bit higher, all it has to do, the DXY dollar index breaks above 91, it's going to break its trend line going back to March, and it's going to break an inverse head and shoulders pattern on a technical basis. So it gets above 91. I'm telling you, it's going to catch a lot of people off sides. The emerging market stocks are going to get hit. The EEM, emerging market ETF, is going to get hit. The oil stocks are going to get hit. Anything that having to do with commodities are going to get hit. That's okay. Again, I'm bullish on them long term, but you might want to take some chips off the table. If we get above 91, take some chips off the table on those names and look to buy them back lower. And you might even want to look at again, making some negative bets in the market. The EM, you can buy an inverse ETF on that. You can buy an inverse ETF on gold and other commodities. So this is one thing that I just think is going to be very, very interesting. This is just to tell you a little bit, one last thing on the dollar. This is the COT data, which is the commitment of traders data. And I say the specs, that's the speculators. That's considered the dumb money, all right? They're not the ones in the market every day. So they're the ones just betting on the market. They're not in, I mean, for instance, oil companies, they're not speculators. They're what they were called commercials. They're in the market every single day. So they know what's really happening in that business. So you always want to go with them. You want to go against the speculators. Well, you can see here, this is their short, but this means they're short. This means they're very long. Look at where it is. Now, I don't have a long-term thing on the dollar, but I'm telling you, each time here, this was followed by at least a multi-week, if not multi-month bounce in the dollar. And we have everybody on one side of the boat. I'm telling you, we're going to make money trading dollar issues. Trading against with the dollar and against the things that have done well the last 3 or 4 months as the dollar slid lower. We're gonna make a lot of money. And I'm telling you, just in the next couple of weeks, I think, certainly in the next couple of months. To go back on what we talked about with a couple of names earlier, I just mentioned here 2 real quick ones, and you can go ahead and interrupt me, Neil, if you want to go on to. We can go to
I'm about to interrupt you. I just want to ask chat, guys. We've got some more forward-looking plays. Just want to reiterate, Matt. You're pretty damn sure that we've got a correction on the horizon, to some degree. Timeline for that? Is there a timeline that you have in mind?
Well, I've been thinking I've been thinking my it's funny because I called for a post or really in October, I said, we're going to get a nice rally into the end of the year. Rice rally into the end of the year. And I said, and it should flow into early part of the new year. But I really felt that as we get towards the end of July, which we're getting there, and especially into early February, that's when the most likely time will happen. And the reason for it is that because when the vaccines start kicking in and the cold weather peaks, all right, that's when some of this liquidity is going to start drying up, because the Federal Reserve, they're not going to, first of all, they're already laying the groundwork for a taper. It's not going to happen until next year, but they can taper unofficially. That's exactly what they did over the summer. If you look at the Fed's balance sheet, it shrunk a little bit in June and July. And guess what? And into August. And guess what happened in September? We got a 10% correction. All right. They don't have, so they'll do the same thing because they don't want to keep the pedal to the metal and in this very overvalued market and create another ridiculous bubble. They'll be like, let's let the economy take it higher next time. That's going to cause a correction. And even Bill Dudley, who's the former New York Federal Reserve president, said, he's like, we cannot avoid a taper tantrum. We're going to have one. Be ready for it. Embrace it. Don't fight it. And so to answer your question more clearly, we're getting in that time frame. It may get pushed out a little bit more. So I'm going to look again for the sentiment and technical factors to take it down. But when it comes, it's going to come quickly. And one of the leading indicators, I think, two of the leading indicators are going to be Tesla and Bitcoin. If Bitcoin and Tesla get hit hard next week, that's going to be a signal that liquidity is less plentiful and the market's going to go lower.
So there you go, guys. Watch those two. Watch Bitcoin. Watch Tesla. Thanks for making it simple, Matt. I think that's what we're looking for here. Guys, I'm getting a lot of tickers in chat. Matt, I'm thinking the best thing to do right now is go ahead and pull open the terminal.
Okay.
And let's start looking at tickers and start identifying opportunities. And if there's not an opportunity, let us know why. Let us know your thinking.
No.
So guys, why don't you guys go ahead, keep those tickers coming. I'm a simple man. The best I can do is usually the most recent ones, and I work backwards. I'll do the best I can to get the people that are in there early. CRSR, I don't know that one. Is this supposed to be CRISPR?
Okay, I'm sorry here, Neil. My Bloomberg shut down, but okay, I'll just get it right back up. It'll only take a second here.
Yeah, do your thing. I'll keep everyone entertained. But yeah, guys, it sounds like part of this correction is going to come because that liquidity is leaving the market. That means the money machine is going to stop going burr. If you guys are familiar with that little meme that goes around the internet. But I mean, something that I like that I'm hearing from Matt, if my computer's not completely frozen right now, which actually it is, but I think you guys can still hear me, is that we embrace these corrections. They are opportunities to get stocks on sale. They're also opportunities, as long as we anticipate them, to short some stocks, buy some puts. Now I think I'm frozen. I might, Matt. I'm sorry. I think I might have to restart my computer, so I'll be back in about 5 minutes.
Okay, great. I can carry it from here. And the reason why I want to talk about this thing with the liquidity is that, again, what we're getting lots of fiscal liquidity. We're getting lots of we've already had and lots of monetary liquidity. But as I mentioned, the Fed is already laying the groundwork in the last couple of weeks. And they said, oh, well, Chairman Powell came out and said, don't worry about it. It's like, no, that's what they do. I've been doing this long enough. I'm telling you, they contradict each other. They say things that contradict one another, but because they don't want a major taper tantrum to take place. They know they can't avoid a little one, but they want to avoid a major one like we saw in 2013. They learned from their mistake in 2013. So again, they're going to pull back on that and say, well, wait a minute. Well, if they're not going to pull back until early 2022, why do I have to worry about it? Because the market's forward looking. I mean, the bond market is already pricing it in. There's a reason why the Fed, to the exact day, when did the long-term bond break out of 1%? It was the day that the Atlanta Fed Bostic planted the first seed about tapering back on QE. It's not a coincidence. They're telling us that. And the bond market's already starting to price it in. The stock market will start to price it in soon as well. And the same thing, as I mentioned, just on the fiscal policy. We're going to get some. And yes, that's going to be helpful. And that's why I'm a little worried about calling a top right now. But I do think it's coming. And the reason is that, again, it would make no sense for for president. He's got smart people working for him. They know that they need to have the market doing better in the last 2 years of the term, and that doesn't matter what happens. I mean, of course, they don't want to have a disaster, but they don't want to worry about that. And just one last thing. Can I get on to now?
Yeah, you're still screen share. You're good.
Okay. Can you see my charts now?
Yeah.
Okay. Now I just have to. How do I get? Okay, there we go. Okay, perfect. Okay, so now
let's get some tickers in here, people.
Sorry,
tickers. Let's go. All right. Yeah. No. Without further ado, let's start off with. All right. I'm gonna get NIO. This is no particular order, people. I'm just whatever I see first. I'm going for. Let's take a look at NIO. Neo. Electric vehicles.
Yeah, look at that now.
Kevin, if you want to sub to Matt's recommendations, there's a link in chat. There's a link in the description.
Okay, great. Here, sorry about that. Just took me a few minutes to get these things going. Okay, NIO. Okay, here we go. This one, you know, gosh, still looking pretty good. It was funny. The last time we had talked about this, I said you got to sell this thing, and it worked out very, very, very well. It was above $50. I think this thing. I said this thing's going to trade back down, and it is exactly what it did. This was right in here. We were talking about it right in here. It got above 50, and of course it came down. And now it got above, but it got overbought again. But it made a nice higher low, higher high. It's had a nice run on Friday. It's getting a little bought, so we got to be a little bit careful here, but I still think it's probably going to make another higher high. I like this thing. Look at that 50-day moving average is going to be good support. That's what you want to be watching over the next. That's the yellow line there. Is the 50-day moving average. It hasn't been above that. It hasn't been below that. I'm sorry, since March. So you're going to be able to watch that. That's going to be, you get below 40, below basically $50, and you break that 50-day. You do not want to be long this stock. I'm telling you. Right now here though, again, it's getting a little overbought. So we want to have tight stops, but it looks like it wants to go higher to me. And of course, the whole story behind NIO is one that has a lot of momentum. And again, if the market rolls over next week, that's why we have the tight stop. It'll get hit hard, but this one looks pretty good to me. I mean, I think this could easily go to $70. I mean, quickly.
So strong bull call from your man, Matt Maley there. Next stock up, let's go ahead and take a look at someone asked me really nicely. So I'm going to go ahead and go with Charles. Thank you. INUV. INUV.
M as in Mary or N as in Nancy?
N as in Nancy.
UV. Okay, great. Okay, yeah, boy, that's one overbought stock, and you can see it came way down here. You got an RSI, relative strength index. I mean, you look what it did over here back in June when that relative strength index got well above. It's still above 80 right now, but back then it got to what here 81. This time around it got as high as 87. Let's look at the weekly RSI chart. Weekly, bang, look at that, 88. Oh my goodness gracious. I do not want to own this stock. I would take profits. I know it's come down from where it was intraday last week, and it could maybe get one more bounce, but this is one that, again, long-term, it's made a higher high. That's great, but boy, this relative strength index, when it gets up near 90 like this, that is rarefied air, and it can't stay there very long. Now, let me put it to you this way. We saw that similar move in Bitcoin a week ago, and I was saying, maybe it can go a little bit higher, but this is extremely high. It's getting set up for a 30% correction, 20 to 30% correction. That's exactly what we got last week.
Absolutely. All right, so we are bears on this one. So let's take a look next at, let's do Snow, SNOW. Let's take a look at the cloud sweetheart of 2020.
Yeah, this is one where I am definitely, again, we talk about several different things. I'm bullish on the cloud computer. We are in such early innings of cloud computing. So this is one. Look at the you can look at the RSI chart. Okay, it's down here. It's not wildly oversold like it was back in at the very beginning of the year, but it's one of the things, again, you can't gain a lot from the chart because it's such a short-term one. They just went public, but the thing is, cloud compute. when the money the money is going in the last couple of days is going into the mega cap tech names. I can understand why it's going into Netflix because it broke out nicely. I can see why it would go into Apple if we get the nice news next week. But this is not the future. These ones have had their huge runs. I take it back. They're great companies that you can make nice money in. But where are the ones where you can make a lot of money in? And it's going to be this one, Snow. Again, I like the fact that it's worked off the big over, kind of after it went public, this kind of crazy, I don't say crazy, but speculative run up. Now it's starting to form a base here. If we could, especially if we can make a high, it doesn't even have to make a higher low, but we said this low here is higher than that one. That's good. It breaks back above, especially if it breaks back above. Let's look at it on a closing basis. I just want to do real quickly. But again, cloud computing, early innings, that's positive. If you get a higher high above, bang, 304.20, this stock's going to go. And go again. I think it's going to go to 350 in a New York minute.
So I'm so bullish on that. And I just want to get a confirmation, Matt, when we're talking about Apple, are you thinking wait until after earnings for a confirmation of the direction on that?
I think Apple is, yes, I am working. I'm waiting for that, especially if you want to do the options play. But the options play should be a great one because it should, my guess is the next couple of days, because everybody sees it's up against all-time highs. Are they really going to, are institutions going to plow in with major money before their earnings? They're gonna, because most of them already own it. They already own they already have a big base, so they don't have to get a new position. And so if they miss a little bit of a move, if it opens up 2 or 3%, they're not going to care. They'll buy it up 2 or 3%. That's no problem. But we want to take advantage of that in that options play. But I definitely believe. So I guess my point is, so the next couple of days is probably going to just trade sideways would be my guess. If the whole market rolls over, of course it will roll over with it. But yeah, I'm definitely saying hold off, look at the options play. You can look at the Friday options, look at the straddle or strangle. You can make some real nice money there. But the thing is, I don't have a problem by going long here because I'm leaning towards the long side because it has broken slightly above that key all-time high, but have a tight stop. Just have a tight stop.
So let's do one more ticker, and then I want to make sure the folks that want to get the subscription understand how it works, and let's come back and do a couple tickers. So let's do a rapid fire RKT, please.
RKT or P?
T Thomas.
Thomas, okay. Wow, so he's, this is one, I see these are ones that you just have all sorts of great potential because they, they get stuck in these sideways ranges. And so whichever way it breaks out, see, it's very neutral on its RSI chart, its relative strength index is neutral. But if you look, I'm going to get rid of these moving averages because they're so short term, they don't tell you. But this is what you call it. It's a very, you can either call it a sideways range, or you could call it let's call it a symmetrical triangle pattern. And for some reason, I can't draw my charts. I can't draw my charts yet. But anyway, I'm sorry. But you can see that it's high. It's making lower highs, but it's also making higher lows. Okay, that is so that's the kind of thing where we're new. We have to be neutral. Okay, here it is. Here it is. There. See that? And I'll go back to the red. But it has a lot of potential. And see now there, see how that's forming a triangle there. It's called a symmetrical triangle because it looks pretty good. I'll get rid of this out of the way.
So when you've got a symmetrical triangle like that, how many times do you want it to touch that resistance line?
It has just twice, and it's touched. Here again. Here's a second time, so that's fine. The more you do it, the one thing is that this is such a kind of a narrow one. But you break above this line, break below this line, it's going to be a problem. There's no question that's going to be a problem. So you want to be very nimble on this stock. I'm going to say, yeah, you want below 1925, you're going to want to get out of the name, and you get above 2055, which is not that far away, 2055, 2050. You can add a little bit more to it, and then after it breaks up out here, you break above 22, it's really going to run. So this is a coiled spring. This stock is a coiled spring, and it has a lot. Again, you can it trades 5 million shares a day, so it's very, very liquid. You don't have to worry about that. And I was going to say, does it have options in some of these things? No, and it has options too. So you can play that thing again too. This is one that doesn't have weekly options because it's a newer name like Apple, which has been around for a long time. So, but that's another one where you can play one of those straddles or strangle calls, because when it does move, it is going to move. And in today's marketplace with all these algorithms, once it breaks a key resistance level or breaks below a key support level, the money just goes. I mean, those things just kick on and off it goes.
All right, guys, really quick, I just want to show you how the subscription works to make sure there's no confusion. And Matt, we're getting a little bit, the folks are saying you're giving us so much information. Feel free to take a breath. I'm going to give you the opportunity to get some oxygen flowing. Guys, I'm real quick. I'm just going to show you how the subscription works, and then we're going to come back with AMD, come back with CRSR. CSR. Whatever, you know what I'm talking about. You said it a bunch of times in chat. All right, guys, so I'm going to share my screen really quick and just show you something special. Very, very special. Do you guys see my screen? Do you see it, Matt?
Sure do.
Hey, guys, it's a birthday cake. Happy birthday, guys. This is the structure for Matt's subscription. At a base level, we've got the starter edition, and I'm going to show you guys how this process works. That's 2 picks plus research oriented toward educating you to find these trades on your own so you can earn while you learn at the base level. If you want more picks with that research with shorter time frame targeted sell dates, you want to go to enhance. That's 4 additional picks that you get on a weekly basis. Of course, both of these are discounted right now for you guys, 30%. So you get that for 207.9 per year. And then at the top tier, for you very active people, Matt has a strategy call. Right now, it's 3 days a week at lunchtime, Monday, Wednesday, Friday, that you can join and get the recording of if you can't make it. And that's where it's just a rapid fire of right now, these are trades that you can make, or if this happens, make this trade type of conversations. It's also where we talk about trading options on top of the picks that you get at the starter and enhanced tiers. So what I'm trying to illustrate to you with this beautiful birthday cake from cool2bekids.com is that these tiers, these subscriptions stack up. They build on each other. You want them together. So if you want to get your feet wet, try starter, but I really recommend at least getting enhanced because guys, there's a 14-day money back guarantee. So if you don't like it, just cancel it, get your refund, and move on to the next thing. That's totally fine. We want you to be successful in your trading and be happy with it, but at least get level 1 and level 2 to try it out so you can get picks in time to see if it works out for you and it matches your schedule, your trading style, and how you want to do things. So I'm going to share with you now the actual checkout process because we get questions about this sometimes. Matt, can you see the checkout right now?
Yes.
All right. So right here, I'm just going to go ahead and get that first layer of the birthday cake. All right. This is Neil plus 24 at benzinga.com. Very easy to get. The coupon code is pre-applied. All right. You can add to your order our Stocks to Watch newsletter. No need right now. That has nothing to do with what Matt is doing. All right. That coupon code is pre-applied. I'm going to go ahead and grab that first layer of the birthday cake for 2 high conviction stock picks plus a breakout buy and sell price. All right, I let that load. Then I'm able to get the next layer of the birthday cake 30% off, and it continues and it continues, right, until we get to the strategy elite. I think you guys get it. I'm just going to click this and add this to my order. The idea here is that we're layering up that cake. I want the whole suite. I'm going to try it out. And then, if it doesn't work out for you, we understand. Just let us know, and one of our wonderful customer service representatives will make sure that you're refunded and you don't have to worry about us. Otherwise, welcome to the party. I trade with Matt. I use his picks. I have the pleasure of getting to listen to every single strategy call because I place the recordings on the membership website, and it's awesome. We're talking options trades, quick turnarounds, absolutely fantastic. And you get that 30% discount on this final Strategy Elite edition. That's enough about the subscriptions. Now I'm going to stop sharing my screen and I want to get into our stock picks. So Matt, if you wouldn't mind, go ahead and fire up AMD, and I'm going to stop sharing my screen and give control back to you.
Okay, great. The AMD, let's go with that. Can you see it okay?
Not yet. I think you have to go back to screen share.
Okay, hold on. Let me just get that done. There we go. Screen share and share. How about now?
Yes, sir.
Perfect, perfect. My son's not even here. I got it done.
Hey, earning and learning.
There we go. So the again, this is one, the AMD. I mean, what a great company. And it's funny that CEO is not, I was going to say new CEO. She's not that new anymore, but she's done an unbelievable job with this company that had been, really had tough times. It was just it's kind of what Intel went through. It just couldn't do anything right. And so again, I'm very bullish on the chip stocks. They did get quite overbought. AMD kind of lagged a little bit here, right in here. When the rest of the group took off, it was a little bit late in taking off. But looking again here, the one thing I got a little worried here, it looked like it was going to make a lower low, and it actually did make a mild lower low. But it's, again, that was one of those things where you always have to worry about head fakes. You want to make sure that it doesn't, when you're making only mild drop below 90, which it did, that's okay. And as you saw on the RSI chart just before, it worked off that overbought situation that developed here. So right now I'm sitting there going, okay, I'll keep nibbling on the stock here on the long side. I like it. If I own it, I want to hold on to it. But if we break above these, this key level, and suddenly my thing's frozen a little bit, but you can see there it's up near 98. You're going to get, that's going to be the kind of breakout that is going to, again, suck those algos in a major way. And it's going to be, again, so this is, even if this is, it's a lower low, but it's a very, very minor one. We're talking about this, you'd have to drop below here to get any kind of a real lower low that would really scare people off, the algo traders. So, again, those are really already locked in anyway. It's not, they don't even think about it, but when they see those breakouts, they go. So again, that 98 level is going to be one. I'm sorry, my screen's kind of gotten frozen up here, but I can't give you the exact level on that thing, but it's going to be, you can see where it is right here, 98. You want to be a big buy. You want to hear, I finally got it here. So yeah, $98. You break above that in any kind of meaningful way, it is going to fly. And especially because I think this group overall is a great one.
All right, so next up, we've got ASTI, Alpha Samuel Tango Iowa.
This one's, it's funny. It's you can see the great breakout here. I'm not familiar with this one, so I can't talk to the fundamental picture behind it. The solar technology companies are a little bit, they have been, quite dicey. President Biden comes in, he wins. This is one that you got to be a little careful on, because again, it's RSI got the geez. I mean, it's well above 90. That is crazy, but it has worked off its overbought condition. I guess my point is, I'd like to see this RSI come down a little bit more. There's no question in my mind that former Senator Biden, President Biden, is going to be bullish for this whole sector and for the green energy as it is. The one thing, though, is a lot of people are saying, oh my gosh, I got to get out of, Biden won, I got to get out of the fossil fuels. And if you have a moral thing against fossil fuels, I understand, but they're not going away. These solar issues, wind, whatever happens to be, it's going to take decades to work completely away from fossil fuels. That's why I like some of these energy names for this year. I think they're going to do very, very well. The solar names, again, I'm glad it's coming back, because this got ridiculous. Okay, it rallied that much over a very short period of time, and you see it's RSI. Look what happened last time it got up here. It did come down for more than just 2 days. So I'm looking for that RSI chart to work off the oversold. I'm looking, see this thing get back down near 15 cents, down near its lows here that we saw on Friday, and then it looks like it'd be another one. But here's, like I said, this is I'm sorry, that's not 15 cents, that's 0.1.5 cents. But here's ones, you look at these penny stocks, This one is one you can really play in. My point is I'd like to see it pull back and work off that overbought condition, just like it did at the very end of the year, and presented an unbelievable. Look at that buying opportunity here after it worked off that oversold condition straight up. So again, it's geez, it went up 2 pennies, but it went up 400%.
Let's talk about the genomic play. Let's talk about CRISPR, CRSP. This one's been interesting.
Yeah, I mean, this is what I love. What's happened here recently is that some of these key, some of the bank stocks, some of the stocks, even though the overall stock market is held up near all-time highs, some of these individual stocks and a couple of groups too, especially the bank stocks, have pulled back. That's normal. That's healthy. You want that to happen. If you go straight up, parabolic moves, we all know how they end. And the fact that this has been able to work off its overbought condition is good. But it has been able to do so while remaining and giving us again higher high, higher low, higher high, higher low, higher high, higher low, higher high. Again, this is settling in there nicely. This is one you want to be nibbling on. And again, if you break above, and again, when I look at technical analysis, I always try to look at the on a closing basis, because that's really what most technicians look at. But again, here you break above that. You can be nibbling here, and you get a break above that level, which is bank $210. You get above 210. Each time it's had a higher high. It's had a nice run. I mean, again, it might be singles on a short-term basis. This might just be a double or triple. But again, if you bought it on this breakout down here, okay, that single right here, the single that took place right here, it turned into a double. Now it's a triple, and it's going to be a home run eventually. And you raise those. So now your buy stop, but your buy stop isn't here. Okay, if you've owned it down here, oh my gosh, that's when I said, always do not take losses of more than 10%. But if a stock goes up, well, this one's almost doubled, okay, from here. If you bought this thing back in November, it's almost doubled. If it goes down 10%, who cares? You're still at 90%. I'm saying don't take a loss of more than 10%. So raise your sell stops. Now, maybe here, this would probably be a good level. If it gets below this level, 150, that's going to be a key lower low. We need to be careful because it would also take it below its trend line from November. But right now, the stock's looking real good, and you break above 210, it's going to get another leg higher. And for those who are just getting into it, it's going to be a single or a double. Those who own it, it's going to start getting into home run territory.
Beautiful, beautiful, beautiful. Let's get about 2 or 3 more stocks so we can let Matt get back to his life. Let's do Plug, PLUG, please.
This has obviously been one that has been in the news now. The thing about, again, this one's getting overbought. Now, one thing I want to say about this one, though, even though it's getting overbought, one thing I watch closely all the time is the most active options. And the reason for that is when you get a lot of small trade, Plug is this nickname Plug. It has seen a lot of call buying, and when smart people are buying, the thing is when you see a lot of small trades, a gazillion small trades, that means you have a lot of people who really aren't, maybe not on Wall Street. They don't, it's not saying they're smart people, but they don't know the industry. They don't know the stock that much. They're just kind of buying momentum, and that gets scary. But when you see blocks of options trade, then you see is okay. Well, somebody knows something, okay? Because the option, they're the guys. I just spent $1 million on an option. Okay, that's a sophisticated trader. He may be, who cares? Even if he's running $10 billion, that thing's going to go to zero. So he's not going to just sell. He's not going to put $1 million into an option that's going to go to zero in 2 weeks, unless he thinks he knows something. Okay. He or she thinks they know something. And in this case, we've seen a lot of buying. So my point here is on this one, on a purely technical basis, I love the fact that it's worked off its overbought condition, but I would love to see it get down more in here, down near, around 60 on its RSI. But that would take the stock down, again, down near where it was on its intraday lows recently in the mid 50s, or, as high to mid 50s. So 57, 58, look at the RSI chart. But you don't want to short this thing because, again, we're seeing some good call buying. So don't be afraid to nibble at this thing here. It's an unbelievable momentum play. It can still go higher, but I'm a little bit more cautious because again, those relative strength index charts are getting very, very extended.
Beautiful. All right, guys. Right now, rapid fire. I put in chat what you want to see right now. I'm gonna get what I see the most. If I see something more than once, I'm gonna go with it. Oh, you can't put two in the same.
While you're doing that, I just want to, why are you doing that, Neil? Just want to reiterate the difference between options. You see a put call ratio. When a lot of people are buying calls, that's negative. When a lot of people are buying puts, that's positive. However, when you see what I like to see is big blocks trade every once in a while, and that's one of the reasons why we made 300% in 2 days in Wells Fargo, because I saw a big block trade, and I was like, somebody just spent $1.5 million on calls that will go to zero if the stock doesn't rally over the next 3 days. Somebody knew something. I'm not trying to start talking about insider trade. All I know is that I saw that and I said, we got to buy this one. Nobody spends that kind of money unless they think they know something. Either they know something or they think they know something. And it worked out very, very well. So again, when you see big blocks, that's when they're a good indicator. When you see a lot of small trades and it's a lot of them, that's usually a good contrarian indicator.
So that's why I like your strategy elite calls, because we're able to actually hear you explain this type of stuff,
right.
And you're eerily accurate when you say this stuff. All right, guys, PLTR is the final one.
Never heard of that one. That and Bitcoin, I've never heard of those. But
why don't we? Would you mind looking at Bitcoin after a Palantir? Because I think that'll appease these savages.
Absolutely. Though here this is one. It's like we want to hold off a little bit here. After that huge move it had on Friday, that's very bullish, but it didn't break above the high, right? So we want to be. Well, let me look at it again. Equity GP. And again, I want to get, those are the intraday charts, bar charts here. I want to give what just shows the closing. Well, no, look at that. I'm sorry. Now I'm glad I looked at both of those. It made a nice higher high. Now, so this is a good breakout. The one thing I always worry when you get a huge breakout on just one day, in one move, but this is showing you the upside. We want to make sure that we get some more upside follow through, because we see this RSI chart is overbought, not as overbought as it was there, but you need to be a little bit careful. But I guess my point is that the breakout on a closing basis is very bullish. And but because it's overbought, and because I'm worried about the broad market, you want to have tight stops on this, because if it rolls back, when it rolls back over, it's going to get hit pretty good. Now, the last thing that my just to say, and we'll talk about Bitcoin in just a second, but again, I want to reiterate: embrace declines in the market. They're healthy. They're normal. They're incredibly normal. They're healthy. And there's nothing wrong with chasing. Momentum stocks are great, but when they get too far onto one side, they can pull back. Take advantage of those, because when you get corrections, especially in a market that's been as speculative as this one has been, some people have been buying on margin. We've all heard that the margin debt is at all-time highs now. They're going to have to sell. They're going to be forced to sell, and that's when we're going to be. So we're going to be able to take advantage of them forcing to sell. I was like, well, I love this stock at 32. Doesn't matter. You have a margin call. You have to sell it. Okay, and then it's going to go to 20. I'm just making up stuff here, but in terms of levels, but that's what happens. The baby gets thrown out with the bathwater, and when the blood is in the streets, and we've had that washout move, you come in and buy, and it's just an unbelievable time to buy stocks. So, but embrace that, and because you do not want to be that person who has to sell at the exact wrong time. You want to have some cash on the sidelines so you can take advantage of it, just like we were able to do last year when we had cash on the sidelines in March, when other people were being forced to sell. But let's go back to Bitcoin.
Really quick, Matt, before you switch to Bitcoin, still on Palantir, my good buddy Sylvester Salzano here, really curious about RSI in this case with Palantir.
Oh, okay, sure.
How does the RSI inform anything that you're saying about Palantir?
Well, it's just, again, it's a little bit hard. Whoops. Did I not? There, okay. I must have just typed up the wrong.
Hopefully this play.
I must have typed up the wrong one by mistake, or inverted the things. Okay, now again, relative strength index is, it's just a sign of momentum on the strength of the buying on a short-term basis. Now, again, these guys haven't been public for very long, so you don't have to say the weekly, it only has a weekly chart that's, looks quite overbought, but since it's only been public for a short time, what you like to be able to do is say, well, how overbought does this have to get? I mean, if you're looking at a utility company, 71 on the RSI, you'd say, you got to sell this thing. But Bitcoin, it can go to 90. And same with this one. It could certainly go higher here. And it's just telling you it's getting into a little bit of the danger zone. Anything above 70 is getting overbought or is overbought. Anything below, there's a reason why they have the red line there. The red line above 70 means you should sell. And the green line means get in there and buy, go, buy when it gets down to 30. But we knew certain things, and this is obviously a volatile name, that we don't have to worry, say, oh my gosh, above 70, this is a major problem. It's not. So that's why I think we can like this thing, especially with that breakout on a closing basis. But we do want those tight stops just because of the my overall broad look on the broad market.
Fantastic. Now let's get to Bitcoin.
Well, the thing about Bitcoin, okay, sure. Okay. It trades on the weekend, which basically nothing else in the world does. And you got to be a little careful about these moves on the weekends because so I'm not if it moved $3,000 or $4,000, it's down $1,000 right now from Saturday, not from Friday. But the key we're looking at right now on Bitcoin, first of all, I just want to say, as I said before about Amazon, that Bitcoin, I'm very bullish on it long term. It's going to, I believe it's going to change the world. But we have to remember that things that change the world still see significant pullbacks. What happened to Bitcoin in very late 2017, most of the decline came in 2018. It went down, 80%. That's exactly what Amazon did. Even though it was just getting started on its quest to change the world, it fell 90%. Amazon fell 90%. So Bitcoin's had its big mega sell, just like Amazon had. The thing is, as I mentioned earlier, Amazon has had more than a dozen declines of 40% over the last 20 years, and just in the last few years. And it's had two over 60%, okay? And it's had one of those in the last few years, okay? Or one just last year. I mean, Bitcoin is going to see these huge declines, and we need to be careful. Right now, I'm worried about, let me just pull it up, on a closing basis. The thing I'm really worried about is right here was the close of last week at 31,000. Hopefully my thing won't, but you can see here, see that low there and that low there? Okay, that's right at 31,000, just slightly above 31,000. Okay, you can see we're getting right back close to it. If we close, usually I would say if we close below that level, I'm gonna wait until we get into real trading next week, which will be tomorrow. And we close significantly below that. Round numbers mean a lot less to technicians than people think. But in this case, because it is very important psychologically, and there are so many individuals in this thing right now, that 30,000 level is going to be my level. If we break below 30,000, I think we see a very, very quick drop to 25,000. And it could even go down to 20,000. This guy, Scott Minerd, he's the CIO, one of the founders of Renaissance Partners, incredibly successful Wall Street man. He says it's going to 400,000, okay? But he also says, then last week he came out and said, I still think it's going to 400,000, but I think it could be the top maybe in for this year, not just short term. And I think it's going to 20. That's what he said. He said he thought it was could fall as low as 20,000. My target is 25,000. But the point is, there's a lot of leverage. You individuals cannot buy. You go to the Schwab account, they won't let you buy Bitcoin on leverage. But there are the sophisticated people can. And the majority of the positions are held by these sophisticated traders. If this thing falls hard, they're going to get margin calls. They're going to be forced to sell, whether they like it or not. And so it moved down to 20,000. It's not out of the question. Obviously, any kind of move above this, old level 41,000, it's going to rocket higher. Last weekend, when I was talking to, I'm at tier 3, Friday before last, and I just said, you're not going to believe this, but I think it's going to go to either 50,000 or 25,000. And they're like, anybody could say that, but I'm like going, no. I think it can happen in the next 2 weeks. In fact, it almost has to happen, because if it breaks above its old highs anybody who's shorted is going to get squeezed really badly. And all the momentum players are going to come into it once again and take it to 50,000. If it breaks below 30,000, I think those forced selling is going to take it to 25,000 in a New York minute. And it could even take it down as low as 20,000. That's going to provide an unbelievable buying opportunity. So I'm kind of talking out of both sides of my mouth and saying, and not telling you, I'm leaning towards the bearish side. But again, I don't want to do anything until real Monday trading. But this is key support. And it will show. Let me see. The short-term trend line has been broken already. Longer term, it's still okay. I could draw these lines here. I'm sorry to have some problems drawing these lines today, with my computer keeps freezing up. But yeah. But anyway, if you start from the October low, that line comes in at about 25,000. That's why I like that level. I wish I could draw it for you. I apologize. But you can see it's very short-term trend line since early December or mid-December. It's already broken that. So when you break a trend line and then make a key, and again, we already made a minor lower low. And I hate to say it, but let's look at 2001. I definitely do not think we're going to see a repeat of 2017. We've already had that. But look what happened there. It's very similar. Okay. I just showed you though that kind of mini lower low. I'm sorry, mini higher low, and then it broke to the lower low, and look what happened. Okay. Now we've done something very similar. I guess I can't move it over, but let's do again higher low. I'm sorry. Lower high, just like we had over here. It's hard to see it here. And if we break that lower low, it's going to go down. It's just going to go down. The momentum. It's such a key momentum play right now. So I'm kind of on the sidelines, but gosh, boy, it's even falling even more. It looks like it wants to go lower. I'm thinking 25,000. And like I said, a guy who's a lot smarter than I am, Scott Miner, is even, again, a guy who's looking for 400,000 long term is saying it could go as low as 20.
So we're all ready for that. Hopefully, guys. Hopefully, you're paying attention to your Bitcoin. It's traded 24/7. Keep an eye on those charts. Really quick, let's take a look one more time at just how that subscription works, and then Matt, I want to let you go because we have been at it for an hour and a half, folks, 90 minutes of this presentation. So really quick, I'm going to share my screen. I'm going to show you a birthday cake. All right, guys, just to explain how this works, guys, this is an additive subscription. You want to get tier 2 or tier 1 rather, the starter edition. All right, that's going to be 30% off today. 30% off. That's going to get you in for 30% off your annual payment. That's $67.90 per year for 2 picks a month with the research, with the education to go along with it. Then building upon that is your second tier where you get 4 additional picks. So right now we're at 6 picks a month if you get tier 2. And those come in weekly, and that is $207.90, but normally about $300 for an entire year. So we're adding these on top of each other so that you get all of the picks. And yes, they refer back to one another. So that's why it's important to stack them together. And then when we get to Strategy Elite, that's where you're joining the calls. That's where when you're on a call with Matt, it's indefinite. It's all of the trades that he's looking at, his entire watch list, referencing back to enhanced, referencing back to starter, plays on top of, hey, I said my buy price was $2 and I said my sell price was $9 within a 3-month time frame, but I see a pattern right now. We're 1 month in, and I think it's time to buy some calls, or I think it's time to maybe buy some puts. Additional strategies on top of those enhanced and starter picks, including option strategies. It's absolutely fantastic, entirely educational, earning while you're learning. Hey, we want you to get to the point where you don't need to get picks. We want you to be able to find them on your own. We don't want you to subscribe to this thing for your entire life, but we want to get you in and get you an absolute fantastic deal. All right, so get in there, at least get level 2 so you can get picks, see if you like them. 14-day money back guarantee if you don't. All right, so that's how that works. The checkout process, I'm going to go over again really quick. So let me change my share here. Let me get my handy dandy link open. Let's take a look. Where are we at? Is this it? Screen. Yes. Share. All right, you should see my screen now. When you go to the checkout page, this is going to be just starter edition, just tier 1. Remember, we're stacking these up. Coupon code winning picks is already applied, so you're getting this for $67.90 per year for those 2 monthly picks, 2 picks a month. And then once we have made this purchase, we're going to get to the next page and we're going to have the ability to add the next tier on for 4 additional trades. Very simple. Add it to my order. Couldn't be easier. That's 2 picks. And then after this, of course, we're going to see our 30% off the Strategy Elite 3 days a week call session with Matt at lunchtime, where we talk about really getting aggressive with our trading. All right, so I'm going to stop my share. If you guys have any questions, feel free to email newsletters at benzinga.com. We'll get you taken care of, but I recommend at least getting the first 2 tiers so you can get some picks and you can play with them and see what you think. They're good. Trust me. I love them. My trade Matt's picks are amazing. Matt, any final words on the markets? Any final words of wisdom that you can leave people with today?
Well, I just said, well, first of all, it was interesting. You said people from Italy. A lot of people there was said, I'm usually Tuesdays before the opening. I'm on with Lefante, so out of Milan. So they interviewed there with Alex. But anyway, and like I said, I'm ESPN Asia, Bloomberg Asia, and CNBC almost every week. But more importantly, on the market, it's just embrace change, embrace the marketplace. And one of the things why I've been able to be successful, I think, is because even though I was in those trading desk backs in the 70s and not the 70s, in the late 80s and through the 90s, that I always embrace change in the marketplace, embrace change in what's going on, but embrace both sides of the market, the buy side and the market goes up more than it goes down, but when it goes down, those are when you get those great opportunities. And it's don't always be looking for those singles and those doubles and triples add up. I'm telling you, in a big way. And when you get the big home runs, it's just gravy on top of a cake. But it's just the markets. Again, I guess my number one thing, the market is not always right. It's only always right eventually. And that's why we can, as traders, can make a lot of money in both ways. And don't be afraid to look at things in a different light, because that's when you make the money, is when you're thinking about the market differently than everybody else is. If you're looking the way everybody else is, yeah, you can do okay sometimes. You buy Apple at a price and let it ride for 10 years. That's great. And I want to do that too. That's part of my picks. But to really maximize and to really make really good money at it and to maximize your returns, it's to embrace those changes and think differently than everybody else does.
Beautiful. Thank you so much, Matt, for your final words of wisdom and for being here with us today.
Thank you, Neil. Have a great one, and good luck to everybody.
Yep, same. Likewise to everyone. Thanks so much, Matt.
Okay.
All right, YouTube, make sure that you hit that subscribe button and that bell, please. Hit the thumbs up, because that helps us with the algorithm. It helps everyone, so you can get free educational sessions, stock picks, and all that kind of stuff. We want to keep giving you this stuff for free. All right. I'll hang out for a little bit. If you guys have any questions about the subscription, happy to help. Happy trading to you too, Madison. Thank you. Thank you, Sarah. Henry, thank you, thank you, thank you. I will get the link for you right now. The link is right here. Yeah, if you signed up through Benzinga for this session, you will get the recording to your email. The video recording. Bravo. Uh, well, I think we're gonna do one every Sunday. I think we're gonna do this show every Sunday, with a rotating group of traders. So it won't be Matt every Sunday. For example, next Sunday, we should have Nick Shaheen, who's going to talk about options. Uh, uh, Kishore, Benzinga Pro is separate from these picks. You're welcome to get both. They go great together. But Benzinga Pro is for you doing your own research and making trades. It's got a great chat room where you can get a lot of ideas from the community, fellow Benzinga Pro users. Lots of very smart people in there that provide some really helpful advice and good picks. But that's separate from this type of subscription, like Matt's stock picks, because that's him doing the research and providing his research for you. Is the first tier accessible to the weekly course? James, I'm not sure what you mean by that. Pamela, to sign up for the Sunday thing, just make sure that you go to benzinga.com. As long as you sign up for one of our newsletters, like the pre-market activity newsletter, you'll be on our mailing list. If you're not on our mailing list, just email VIP accounts at benzinga.com and ask to be added to our mailing list. Peter, we don't provide previous video recordings for these sessions. The subscription picks for this Benzinga stock picks are all Matt Maley's picks. That's all Matt Maley. We have some other products that have different trading styles. So what you just saw was a specific way of looking at the market, specific picks. But we have actually, if you subscribe for Matt's stock picks, you'll have access to the membership site. And when you're in there, you'll be able to see the other products that we have that have different trading styles, penny stocks, options, and then also very specifically breakout technical patterns. They're all structured similarly. Um, Luke, I don't understand your question. Um, Maria, um, ask if you sign up, Maria, and you ask support. If you email newsletters at benzinga.com, they should be able to work that out for you. That's a special case. We usually discourage that because the strategy sessions are referring back to starter and enhanced edition trades, so we really want them to go together. But we can work out something very unique. But in general, I wouldn't advise doing that. Louise, that's a good question. Matt is not very active on Twitter. Um, the man, the man just uses his charting tools, uses his Bloomberg terminal, sends over his research and his charts, makes his trades, and then he gets off his computer. Peter, we do a monthly boot camp. Right now, we're planning on continuing that boot camp every month, and it's just a full day of education. If you attend, you get a full day of education. The next one is going to be on a Saturday. We're going to talk a lot about SPACs. We're going to talk about options, um, swing trading, day trading, investing. Um, it's definitely worth trying at least once, but we do them every month, and there are a lot of people that come to every single one. Um, Definitely worth checking out. That's benzingabootcamp.com if you want to check that out. Kishore, will you, if you get starter or enhance, will you learn how to make the picks? Yes, that's really the intent here. So, if you when you sign up in when you get your login to go into the website, look at the past picks. Just go through the past picks on the website, and you'll see how they're structured. He's teaching you how he found them. And Luke, Luke is posting the coupon in chat, but you don't need the coupon. If you use the link, it's pre-applied to the page, so you shouldn't need to use it. Richard, I don't know what you mean by the price being lower for the bootcamp. It's free to attend. Completely free to attend. Dolora, you can upgrade at any time you want. If you just get starter today, you can upgrade to enhanced. It's 6 months from now. It's completely up to you. Adil, can you buy the elite membership without going through the other tier steps? It's not designed to do that. We discourage that because we want you to get the picks at the starter and enhanced level, and then the strategy sessions are talking about those picks. It all goes together. Investing strategy for good smaller accounts. Look up I mean, it depends on how small it is. If your account is too small to trade twice a month with Matt, if it's too small for that, I would look up a very quickly growing ETF and just make regular deposits into that ETF. Grow your money safely, conservatively. Learn how the markets work. Gianni's monthly breakout is a separate line of, it's a separate birthday cake, separate line of products. So, you know, I have the privilege of working at Benzinga, so I get to see all the picks and I use all the picks, and life is good. But I would recommend subscribing to more than one. You can get Gianni's monthly breakout. You can get Matt's starter edition, and they're different stocks. They have a different trading style. They're both very good at what they do. Yeah, Eric, the cost is additive. The cost of the subscription tiers is additive. All right, guys, I'm gonna get out of here. I'm getting a lot of angry texts from a person. I love you guys. I will see you soon, probably next Sunday. If I don't see you somewhere else, maybe in the Discord chat. Sean, there is no recommended amount, especially now that you can buy fractions of shares. You don't need to have a full, you don't need to have a full $100 in your account to buy one share of a $100 stock. All right, guys, thanks so much. You will see me again. So long, farewell. You've got the link to the subscription. I'll drop that one more time in Zoom, but on YouTube, you guys have it. Make sure you like and subscribe. Hit that bell because we will be back with more of these sessions, and you want to make sure you get those alerts. Plus, it just plain old helps us with the algorithm. You guys have been on YouTube before. You know how it works. Can you cancel online? Yes, you can cancel yourself online. That's something that we've just added to the website on. So it should be ready. So maybe don't quote me on that. If you're unable to find a cancellation button on the website, just contact support and we'll take care of it for you. And if you qualify for a refund, we'll take care of that too. All right, thanks guys. I'm out. Happy trading.